Hello, hello, hello. Welcome to the Discord. I'm really excited about today's teaching session. I'm going to go over the trading day and kind of what to expect for each time period. There's 7 time periods to the trading day, and each of them, there's a different approach to making money in that time frame. There's a different pitfall that you want to keep your eyes out for in that time frame. I would have loved to have had slides and make this part of a formal teaching event, and maybe I'll do that at some point in the future, but you guys are going to get the test run on me going over these ideas, I think for the first time in the Discord. I'm sure it is. Welcome. I appreciate you guys all being here. I'd love to know who are the regulars, who are the OGs. You can put 2 in the chat. If you're an OG, you put 1 if you're brand new to the family. The very first thing I want to kick off with today is just to remind you, if you're brand new, that there are scammers and impersonators, and they're the first to welcome you so kindly to the Discord. They use my picture and my name, but the name is some variant wrong, such as chart.goat or chartgoat. Or chart-goat. Some variation, it's wrong. It's not actually me, and they attempt to offer you at some point some copy trading, and it's very legit looking. They've got professional websites. They'll spend a couple of days guiding you through the Discord. They actually know the Discord very well. So they'll spend a couple of days guiding you through it, ultimately to gain your trust that you think it's me the whole time. It's not me. I don't DM anybody. I don't DM nobody. It's not me. Protect your capital. I'm never going to offer you anything like that privately. All right, I see a lot of the OGs are in the house. Chaz Mitchell, who is an OG, I'm still here and from the beginning. I love that. I appreciate you being here, Chaz. Seeing a lot of the regulars are in the house, and I'm sure I see some new folks. Anthony, watch out for them scammers. Dennis, watch out for them scammers. They're not me. Good morning, good morning, good morning. I appreciate all of you guys being here. With your help, I'll be out of this truck sooner than expected. 25 years, and it's killing me, but the money keeps me going. Adding to my account weekly, around $500 a week and pushing. Very good. Let's make smart and wise decisions. And on that note, I'm going to do some recap of how did our trade setups. Were they A+ this week? I already know the answer to that, but I'll let you guys be the judge. We're going to go back through this last week and look at the trade setups, because what is very important about that is that you get some confidence. The reason why we're doing everything we're doing today is so that you can build your confidence, as well as that you have a system and a trade plan, right? You're not just guessing. You're not just showing up trying to learn juggling. Sometimes when you go live, the market goes live and you got all this money and you're trying to figure out, you want to grow it, so you're anxious to put it to work. And it's kind of like you're pushed out on stage and you're asked to juggle a bunch of things like the RSI and the MACD and the moving averages and price action. And I don't want you to feel that way. I want you to put together a trade plan that has a controlled amount of risk, a target profit, and something that you're going to focus on doing daily. And then you do it that way, win or lose, right? You let stop losses get triggered. You let take profits get triggered. And then at the end of the week, you measure it. You go, okay, I learned something this week. It's so important. So we've been on a trading bent for a while, and we will talk about long-term investing. I'll do some specialty classes on that. But right now, we're going to stay in understanding the market, understanding the trade day. Good morning, Ambrose. Jorge in the house. Mr. Bazan. Mr. Bazan's been with me for a long time. Okay, what are the 7 sessions, the 7 trading timeframes of the market? Well, the very first one is pre-market, and that is between 4 and 9:30 a.m. Okay. Now, the biggest problem with pre-market, or the pitfall of trading pre-market, is that it is illiquid. Okay. What does it being illiquid mean? It means that if all of a sudden a stock pops, right, and it just really rips up, it could appear as if it's getting ready to make a big move, but it doesn't have any follow through because institutions may not be driving that move. It might have just been a large order, right? And so pre-market orders and post-market orders are illiquid. And the pitfall is that you try to respond to the move, but then it turns around and it just begins to collapse. Okay. So you can't just go off of price action alone in the pre-market because it can be deceiving. You have to have a bigger trade plan. There's not a lot of volume, and institutions do play in the pre-market, right? They do play in the pre-market, but a lot of times it's a low liquidity environment. So what should you be doing in the pre-market? What is your goal before the market opens as an investor? Well, you need to be taking a minute, take a good hour, and start looking at the sentiment, because that's going to give you a bias for the day. I do that, and I don't post my macro view every day. But when I feel like the bias is very strong, bearish or bullish, I try to let everybody know, hey, the market's falling apart right now because there's a bearish sentiment surrounding this data report. So checklist. The very first thing that you need to be doing before the market opens is gauge the sentiment and the bias. Why? Because you're trying to get a guess on the direction or the trend. Now, you don't want to get too much caught up in that headspace, because obviously the trend will reveal itself. So you want to give yourself the opportunity to see what happens in the price action, but you need to be looking at news stories and get a sense of the bias so that you can get a sense of what the daily trend might be. That's what you need to be doing. So I'm going to give you a real world example. So you say it's 9 a.m. You've got a small cap stock and it spikes pre-market, right? It breaks a key level that you've actually charted very cleanly. You feel good about it. The volume, though, is light. Remember that. And the spread is kind of wide. So the bid and the ask, maybe let's say it's a small cap stock and you got one is 30 cents and the other one is 70 cents. So there's a huge gap between the two. All that might have happened is somebody might have took that order, and the very next trade after it is going to go back down to 30 cents. And so you think it's moving, it broke a trend line. No, somebody just made a bad trade. You jump in, it stalls, and then it fades. So you end up getting stuck. Okay. All right. The second, obviously, biggest time frame of the day, where it's the opposite of the illiquid pre-market. It is the liquid opening drive. It's game time. I sometimes refer to it as morning market, and this is a half an hour period between 9:30 and 10. And to be honest with you, most day traders make all of their money in that first 30 minutes. Okay, but that first 30 minutes isn't for everybody. And I'm going to tell you right off the bat, if you're brand new and you have not proven to work a system that you feel very comfortable with, and you feel like you would not describe yourself as a pro, not even an intermediate, you'd describe yourself as a beginner, there's a lot of wisdom to staying out of the first 30 minutes. So the first 30 minutes is actually technically referred to as the opening drive. And what you need to be focusing on here is liquidity imbalances and ODT flow. So you say, Josh, what's liquidity imbalances? So there's a bunch of orders coming into the system in the morning, and we really don't know exactly if they align with the trend yet, okay? And so what that often can reveal itself as is a quick spike up, right? And then a reversal. So you get that spike up, that rejection, and then the trend begins to reveal itself as a steady move down the rest of the day, or a flush down. And the opposite could occur. You could get a huge drop right at the opening because of a liquidity imbalance, but the trend is actually bullish and it goes up all throughout the day. The ODT flow, this is options flow, and it's going to be the first 30 minutes is absolutely going to be the most profitable. So you're going to be, so let's take this for example. At 9:30 a.m., SPY opens near resistance. Buyers flood in aggressively with market orders because it's right underneath resistance. And then you get this huge spike up, but there's a thin order book, which means that institutions are really not participating in this move. And this creates that buy side liquidity imbalance. Price explodes higher until it finds the pocket of sell orders. So right where price opens, there may not be a ton of sell orders, but right 20, 30, 40 cents above that current price, there could be, that's where all the sellers are waiting to pounce on once that liquidity gets rebalanced. Keep me up to date in the comments if you guys have some questions. If any of this is blowing over your head, I'd love to know. So the first half hour, the number one mistake that occurs in that first half hour is basically chasing an initial fake out. And I've heard some older traders say that the market always lies at the open. It lies, which means that if the market drops right at the open, it might intend to go up. And if the market pops right at the open, it might intend to go down. So be aware that in the first 30 minutes, there is a rebalancing and that you have to wait for at least 30 minutes to get the trend to begin to develop. Okay, so session 3 in the trading day is actually after the first half hour, and it's the next hour and a half. So it will complete the first 2 hours of trading, even though it's only an hour and a half. It's tacked onto the first half hour. And this bad boy is referred to as the morning trend. This is where the market actually reveals what it wants to do. This is where people got shook out, right? They got violently shook out of their trade or their position. They've already walked away from the market. Now, from 10 to 11:30, a trend begins to emerge, right? And now it is easier to trade the trend than to trade that initial burst. Even though that initial burst of action will attract the most traders because it's the most profitable. I mean, you can literally make off of the first 5-minute candle, you can make 30, 40% on a Tesla, Nvidia, and sometimes the SPY. If it just has this incredible 10-minute move, you can get all your gains in the first 10 minutes and you can walk away for the day with that initial push, that opening move. But it has the highest likelihood of simply being the market rebalancing itself and the market lying. The trend reveals itself from 10 to 11:30. Now, the number one pitfall for this time frame, because it sounds so nice and easy, this idea of the market trending from 10 to 11:30, the number one pitfall is not getting over a VWAP reclaim. So what does that mean? It means that you made a ton of money on that initial push. So you geared up and you made 40, 50% on some ODT options right on that initial push. And then you went to the upside, but it fell back below the VWAP. And then you're thinking to yourself, man, this thing, it's a hot day. I just locked in 50% for a move on Google to the upside. And you're thinking, man, I'm gonna ride this thing. It's pulled back a little bit. I'm gonna ride this thing back up again. So you've got up in your head. But at this point, it becomes super critical to respect VWAP. Wherever you're at on VWAP at 10 a.m. Eastern time, that's the most important indicator on the chart at that time. If you're beneath it and you made a ton of money on calls in the first half hour, if you're not above it, then you're in a danger zone, because that is trying to go back calls again, even though you've lost VWAP, is probably the number one pitfall that's made in the trend hour. The number one pitfall made in morning trend. All right, we got 3 of the time frames down. So that's, I'm going to read some comments. Ambrose said, so that's why I got smoked in those days. Josh, please show it on a chart when you're explaining for beginners. Great idea, Daryl. I'm going to go through these initially, and then we're going to go and I'm going to walk through last week's trade sessions on the SPY from Monday to Friday, and we'll kind of identify some of these scenarios because all of them were at play, I think, in this last week's trading of the SPY. Great info from Miles, soaking it all up from Dale, Uncle Robbie in the house. Very good, guys. Okay. So the very next session after morning trend, I'm going to test you guys on this one. We're going to have a little bit of fun, some quiz time. What's the next session after morning trend? What do you get? Where do you get after morning trend? What comes in after morning trend? You get the midday lull. Now, this is the worst part of the day, right? And the number one problem in the midday lull is chop. That's when you are trying to force a trade. And that's between 11:30 and 1:30. And I would say that most of you need to make a personal promise to yourselves that 11:30, whether you made money or lost money, you're going to close your laptop and go do something else. The chop is not a profit zone. The midday lull between 11:30 and 1:30, okay, so those 2 hours is likely going to be the choppiest and least profitable time of the day, okay? So the key focus there, though, is beginning to watch. So here's the opportunity if you are watching the midday lull. If the market climbed in that trend session, the morning trend, which was from 10 to 11:30, if it climbed that entire time frame and it's made a new high off of yesterday's high, and it's even gone farther than you might have expected, and a great way of gauging it is if it's hit Joshua's third trend line. Okay, so it's up in the sky on Josh's third trend line, and you begin to see some weakness. The way to trade the midday lull is to begin to recognize fades. So you're going to fade the top or fade the bottom. Now, you don't want to jump in right at the point. You want to observe it and say, okay, are we falling apart here? We've completely lost momentum. Volume is completely drying up. The trend move for the day is pretty much over, and now it's getting really choppy. Now, you don't want to just assume that it's going to fall, because what you're likely, it's still a best practice to walk away from 11:30 to 1:30, because it will pull back a little bit. You might get a test of VWAP, but it could, in the next time frame, begin to rebuild again and actually trend up all the way through the end of the day into the final hour. So 11:30 to 1:30 is going to be your midday lull, and your best practice is going to be watching for the fading of extremes. It could have been an extreme drop, could have been an extreme pump. You want to begin to identify in that time frame if that move is fading, okay? But you can expect the midday lull from 11:30 to 1:30 to be a chop fest. All right. After that, you have what is referred to as the afternoon trend. This could be anything. It could be a continuation of the morning trend. It could be a reversal of the morning trend. But this is where from 1:30 to 3, right? This is where you're going to most likely get a true trend emerging again. People are back from lunch and they're refocusing, looking forward to the next day, and they're looking at the market, and this is where you're going to begin to see a trend occur again. Now, the pitfall there in that time frame is going to be premature re-entries. Okay, so even though it's trending, it's still coming out of a chop fest, and that chop could continue the rest of the day. Your easiest time frame to define the clear trend or the most powerful trend is going to be that 10 a.m. to 11:30, okay? And, you know, that's where the true pros make the most money. There's plenty of money made in the first half hour. I make money in the first half hour all the time, but I also give some back because sometimes I make mistakes. Your strongest trends are going to be from 10 to 11:30, and the biggest pitfall for your afternoon trend is basically it's still chopping. It hasn't stopped chopping, and it hasn't defined itself. And so it could be an extension of the midday, and you might be jumping in a bit too early. But the trend can either continue or accelerate to the downside from 1:30 to 3 p.m. All right. Now, what should you be doing in the afternoon trend. Sometimes people refer to this as prepping for the power hour. Okay, it's looking carefully at what has been happening all throughout the day to get positioned for what you hear me say a lot, which is, when am I going to put money to work? I always tell you guys, when am I going to buy this? I'm going to wait for the last half hour of the day. I'm going to make a decision in the power hour. A lot of decisions get made after a full day of trading, and people are looking to tomorrow. And this is where you're either going to see stuff really begin to take off, right? Or you're going to see stuff really begin to drop. It's kind of indicating that, the bulls and bears fought it out, and the bulls gave up, and the bears are winning, and they're driving it down in the power hour. Now, in the power hour, that's your last time frame of the day. This is not your last. We also have post market, but this is your last hour of market open trading between 3 and 4 p.m. And the things that you're going to be focusing on is going to be that closing push, right? Stuff that's hot, that chopped midday and began to slowly build up in the afternoon trend. It's really going to begin to rip in the last hour of trading. So between 3 and 4, if you're a beginning trader, that is a better time to be watching. Between 10 and 11:30, and between 3 and 4, you're going to have better opportunities. And it's not that you don't want to watch the market the rest of the day. You want to put some cuffs on yourself and keep yourself from making bad choices in those other environments. All right. And so the biggest pitfall in the power hour is misreading closing flows. And you say, Josh, what does it mean to misread the closing flow? Well, let's say that you see a chart as beginning to drop and it begins to really fade, right? And it actually could be that this is still very bullish, but a lot of people are locking in profits because it was a strong trending day to the upside. And so what you're mistaking as bearishness, a stock turned bearish sentiment or bearish trend, is not really bearish. It's just folks cashing out for the day. And so the biggest problem with the power hour is that it could literally drop for 30 to 45 minutes with some profit taking. And then as it pulls back to a key level of support, which might have been the VWAP, it then gets ready for a absolute huge move up in the last 10 minutes. So all of a sudden, you're seeing it as falling apart, but 10 minutes before close, it literally jumps $1 or $2, and then the following day, it keeps running. And the whole reason why you thought it was bearish and bought some puts that you thought you'd carry overnight is because you misread the volume flow. All right, now we're going to talk about the after hours. I simply have to include it, even though this is similar to the pre-market, which is the problem is that it has low liquidity pops. But what should you be doing in the after hours market? You need to be considering what companies are reporting earnings, because that's where you go to make money. If for some reason you must trade after hours, you're looking at companies that are reporting earnings that have extremely decisive moves. That's really the number one thing that you're going to be doing. And you might be looking at how the market's reacting in the after hours to consider how you might position yourself the following day. Those are your 7 important hours of the day. And I'm going to take a minute. I'm going to see if there's any questions on this, and then we're going to jump into the chart, and we're going to kind of see how these played out and what we might draw from what we just covered in a practical way. So I'm going to look at some questions here. Raise Mania. Last hour, I usually buy a long-term dip, adding to my invest stocks. And that is literally the exact thing that I normally do as well. I always buy my long-term stocks in the last hour. Because I want to see what the full day looked like. How can we know to buy dip and sell rip? I think we'll see that a little bit in the chart section here in a moment. Snipe, and I like Snipe's name fits his comment. He says, always take profits. That's what snipers do, right? They're going for the quick profit. Thank you, Jen. Appreciate your comment. And Jorge agrees 1,000%. And Christian775 says, but you can't trade options after hours. So what do you do if the bottom falls out? A la TTD. Well, I will thank you for setting me up with a la TTD. I got out and I told everybody, I rarely, like I'm talking maybe 2 times an earnings quarter, do I do a lotto trade that I literally throw some money at something and see what it does, okay? I rarely hold my options over through earnings. I just don't like to do it. I don't think it's wise, because the truth is TTD was a great example of what could happen. An absolutely new problem could be revealed in earnings that's not been calculated into the existing price, and you have no control. And so unless you had insider information, it doesn't make sense to hold options through earnings for most conservative investors. If I hold one, it's because I've made a ton of money, and I did on TTD, 250% on my options. If I hold one or even 2 over, occasionally I hold 2, it's literally just to see what would happen, right? It's money it's like a little tip. I'm saying, thank you, TTD. Let me throw a little tip at you. Let's see what this does. It's for funsies, okay? I don't advise doing it. Lots of people do. And, you're welcome to follow those people. You'll find yourself that it's hit or miss, right? You'll find it's hit or miss. Okay. Now, one thing I do like, let's say that you had some options on TTD, right? And TTD does not have an inverse ETF, but what you can do, and I've done this before, is cash out of a position, all of your options, cash them out. And then all of big tech has these inverse or bull ETFs. So you can take all that money that you would have traded in options, and you can do a leveraged play on it while you're able to get in and out on one of those leveraged ETFs. I talked about that with UNH, it's got UNHG, which is a 2X bull. And if you can't afford 1,000 shares of UNH, at $300, you don't have $250,000 to put in UNH. You could put in 30,000 and get 1,000 shares. Actually, it's only $17. You could put in 17,000 and pretty much have a faster return, a leveraged return, dollar to dollar with UNH. So that's an option. Joseph Jean Marie says, that's just a gamble. I'm here to make money, not gamble. I agree with you, Joseph. Okay, let's go into the charts and let's look at the A+ trade setups for the SPY. There were some great setups this week, and I'm going to make where this is about the time frames of the market, but it's also about reviewing the A+ trade setups and learning from what happened and giving you guys some more confidence. So I'm going to take you into the chart. All right. First of all, just a quick review of the market. This is the price action on the S&P 500 from beginning of the week to the end of the week. And pretty much if you just take a quick glance at it, you see that Monday, the market lied to us with an initial drop. We then had this massive pump up between Tuesday and Wednesday, but then the market really went sideways, okay? And so that's the overview of what happened last week. We left off in a sideways pattern, okay? And so, I'm not going to try to guess, but, we'd have to really clear the top of this pretty early by Monday or Tuesday for us to believe that we're going to continue to climb next week. The market here, if you look back on the previous week, right, it was really, this whole week was, again, an initial drop on Monday, and we climbed all week, right? Then we had an initial drop on Monday, and we climbed, we leveled out, and we left it at level out. So just be mindful that the market stalled at the end of last week. So we're either going to see it has to really get above 650 for us to believe that we're not going to either continue to go sideways or have a drop. So, all right, let's dive into Monday's A+ trade setup. I'm going to spread this out. And I'm going to turn on the lines. Okay. All right. So this was the trade setup for the week. And how did it do? Okay. So this was probably, this would be a good example of a market imbalance. So it initially started off with a little pop and it kind of vacillated up. We got to 10:15 and we basically got the revelation of the trend. So from 10:15 to 11:10, right? So pretty much the full hour of the morning trend, it trended down. And so if we accept the logic that what happens from 10 to 11:30 is the defining move for the day, then it means that even when we popped, the day was still going to end lower, okay? So both the morning trend and if we then come and let me get the time frame here, the afternoon trend, which would be from 1:30 to 3:30, which is right here. The afternoon trend was already beneath VWAP again, and the afternoon trend came all the way down from 1:30 to 3, and into the power hour, it drove down all the way into close. Okay, so let's take a step back. That's our day. That's our trading day. Okay, the morning trend did give the morning trend as defined as 10 to 11:30 did forecast the coming day trend, but of course there was this pop, right? And really one of the pitfalls mentioned in the timeframes was the idea of ignoring the loss or gain of VWAP. So we know that the morning trend is down. Probably, let me turn the VWAP on, guys. Let me just do that. Yeah. So the very minute we knew the morning trend was down, the very minute this VWAP got lost and back tested, that was the most profitable place for the follow-up move in the afternoon trend for the morning trend. So once VWAP was lost, it confirmed that we were going to be going down all day. All right, so that's just some analysis. I'm doing this, guys. Again, this is not a script. I'm just going off the top of my head and analyzing it as I look at it. Let's ask this question: did the trade setups work? And I'm going to say that you have three. If you go back to your Monday setups, you have the rejection. I always give rejection. Okay, 637.80 was rejection, and the truth is, the rejection trend line did forecast that this was going to be a bad day. So what happened at 637.80, the rejection number, did forecast the rest of the day. But here's where I'm going to view Monday. I'm going to give Monday's technicals an F. Maybe not. Maybe they don't deserve an F, but I'm going to tell you why I personally consider these technicals a fail, even though I see a lot of value in the technicals. Here's where people might have gotten messed up. Okay, so let's turn these off. Give me a minute. So let's say you disregard the rejection technical and you're only focusing on the breakout or the breakdown. The breakout crossed price at 638.80, and even though the very next candle did not give continuation and this candle didn't close above 638.80, I mean, in truth, this is pretty clean. If it were perfectly clean, then we would have hit it. Okay, it would have been 639 if it were perfectly clean. So I would have had the experience, I think, I would have had the experience to know that this had already moved up too much and that it may not make a great entry at 638.80. But if you're brand new and you're taking the position that you're only going to go off the cross of price on my trade setups, I think this would have been a fail for most people. All right. So let's assume that your trading plan was only cross of price. You would have entered here right after it crossed, and then you would have been stopped out. And it depends on what your stop loss is. 20, 30%. I probably would think 20% would be hit here. 30% would be hit here. So if this were you and you were trading only cross of price on my trade setups, you would have entered at 638.80 because it did cross, and you would have allowed your stop loss to kick you out at 20 or 30%, and you would have been done for the day. Now, I'm just going to look through your comments real quick, make sure if you guys are on board with me here. People ask me, what VWAP do I use? I use the standard VWAP. I don't make any adjustments to it, and they will vary. Like if you're in Webull or you're in a different app, sometimes they have smoothing factors to their VWAP, and so, or other dynamics. In TradingView, I'm using standard, and so they are a little different. Christian Torres, I'm confused. You did teach the community morning market high and low, but on the lines you have there are not morning market high or low. How do we incorporate your setup with a morning market high low? I think that the morning market, the first 15 minutes, is an additional check for those who are, pre-market, morning market are all meant to work in confluence with my trend lines. So what he's saying, and not to diverge too far from what we're doing, this is pre-market range right here. And then this is morning market, okay? And then you've got three systems, 1 pre-market, 2 morning market, and then 3 VWAP. So technically, if this candle when this candle crossed above 638.80, it technically had 4 buy alerts going. It was above pre-market, it was above morning market, it was above VWAP, and for 2 minutes, it was above my breakout trend line. And so everything would have been kind of screaming continuation. All 4 buy alerts would be going. Now, the only thing that would have saved you, and that's why I gave this one an F. Do I feel like it's still got a lot of value in it? Yes. It would be a B plus for me, B minus. It would be a solid B for me, but if you're a beginner, it would just be about the same as an F. Let me go find the VWAP. Or no, what was I going to find? Volume. That's what I was going to find. Okay, so when we're live trading in the VIP sessions, I'm always talking about what is volume doing, and this is a great example of why volume is your second most important indicator. Okay, so price is your first most important indicator, volume is your second. So the highest volume bar got us to my resistance, but this never closed above it. And there wasn't continuation. So the next highest volume bar for the day has to be at resistance. Otherwise, it's a fake out. And so if I were trading this and I saw that volume collapsed and we never closed above 638, I would have known to get out right away, probably take a 10% hit, right? And I would assume that I would either jump into puts or wait for this to break down under VWAP and enter puts for the rest of the day. Okay? All right. A lot going on here. Need a clean chart. So I want to walk you guys through this because at the end of the day, there's really only 2 decisions that you have when dealing with my trade setups. You're either going to take the cross of price, or you're going to take a candle close above and a continuation. Those are pretty much your 2 choices. So you're either going to take a cross of price, or you're going to wait for a candle to close above, and it's got a wick, and the next candle closes above that one. Okay, so that is what would be referred to as confirmation. That with a big volume node at the bottom is probably all those things together are telling you, hey, the stars are aligning, start scaling, buy. If in the case of this particular, and I take a lot, I really only take cross of price, but I'm also quick to respond. And technically, and this is why I would technically say this isn't a failure, it's still a high quality trade setup. Technically, no candle closed above 638. And if you don't have a close above the breakout trend line, you shouldn't be in it. I will take the cross of price, because oftentimes if there wasn't this much gap between VWAP and my trend line, in the case of this particular day, if it were much tighter, like right here, I would take the cross of price. I would be a little bit more scared to take the cross of price if there's a mild difference between the VWAP and my trend line. So I'm going to say that this was a hard day to trade for people that don't have that are at least not intermediate. Now I'm going to take a minute. I'm going to look at the comments, and then we're going to move on to Tuesday. And we've only got 20 minutes. I can't go too much longer. I've got stuff got scheduled today. Uncle Robbie says, let's gamble, from the earlier conversation. He wants some of those riskier plays. RDM Spirit, this is priceless. Thank you. Fong Yong. No, I probably am saying that wrong. I apologize. Gambling, but with strategy, Uncle Bobby. Airtwan, AT is watching us. He's a bad cop. Airtwan, that's who he's referring to. I need to do an entire class. I may not give that to you. I don't know. I may or may not give that to you guys. That's probably like, I would have to cover maybe 3, 4, 6 sections. I might put that in a teaching curriculum. It's a big subject. How do I come up with the trend line levels? I'm going to tell you largely wicks, failure and breakout, previous failures, previous breakouts. Oz says, this was the best lesson I've ever got since I joined the club. All right, Oz, I'm going to pick up my game. It's going to be like this every week. All right, let's move on. Okay, Tuesday, let's turn off Monday. We're going to clean up. I like to have a clean. Let's put those items in there, and we'll turn that off, and we'll turn on Tuesday. All right, let's go look at Tuesday. All right, Tuesday. I'm already excited about this one. This is pure. So let's say that you failed on Monday and you got tricked. You got in on the break of price. Moments later, it collapses. It never closed above break of price, and you got stopped out at, maybe you decided to go out early, or let's say you followed your disciplines and said, you know what, I'm going to give every trade setup Josh gives me a chance, and I'm gonna allow a 20% stop loss. But lo and behold, it fails on Monday. You lose 20%. Okay, not a problem. I'm not scared. Tuesdays will make up for a lot. First of all, what I really liked about this particular trade setup for the day is that there were no false wicks. So there was no false signals. It was just kind of right where it needed to be. If you took cross of price only, you might have gotten in on this candle and you would have panicked for a little bit. But if you took close of candle, you pretty much would have gotten, I don't know, somewhere between 60 to 80%. It has a lot to do which option you chose. If you chose ODTE, it might have ended the day at 40%, because as you pushed into the close, you would lose a lot on theta. So if you took the next day expiration, or even end of week expiration, these probably would have been a fat 60 to 100% winner on the day. So you would have made 3 days worth of profit on Tuesday's trade setup. And really all you would have needed to have done is take the cross of price. No false signals. This was nice and clean. We simply crossed and trended up. And interestingly, we hit between, these were the three resistances given for Tuesday. 642, 644, and 646. I'm not disappointed in myself, but we hit those, and that turned out to be, the high over the course of the next 2 days. And we came ever so, this was 646.19, and I was 11 cents to accuracy, 11 cents to perfection. I like being within a dime of exactly where it'll hit. Okay, so Tuesday, I'm going to call this a wild success, and it deserves an A+. It's exactly what you guys want to see from all of the A+ trade setups. All right, I'm going to turn this off, and we're going to go on to Wednesday. Oh, let's take a minute and talk about the different time frames of the day. That's probably the more important thing to do, rather than me getting excited about how good my trade setup was. All right. Okay, so the trend began right here at 10 a.m. on the money. And you got to remember that the trend reveals itself from 10 to 11:30. And so literally the trend began perfectly for the day at 6:36. And would you have bought in right there? No, because you were in no man's land. You could have chosen, and this, I don't want to confuse people, but, reclaim. So fake out, reclaim a VWAP. Remember, that's the number one pitfall, is ignoring the reclaim of VWAP. Okay. So if you really valued the reclaim of VWAP, you could have gotten in right after VWAP was reclaimed. You would have had confirmation past my trend line, and you definitely would have, this could have been a 100 to 150% winner for the day. So let's examine it for a minute. This is a good example where the trend began exactly at 10 a.m. and it ran strong, really all the way to this would be military time. I hate this because mine 13:20, right? And so this was trending all day long, and there was no midday chop. There was a little bit of chop here, very, very small amount of chop, and possibly this was just an extension in our afternoon trend. So the afternoon trend continued higher. And from 10 to 11:30 was your most powerful window. Matter of fact, if you simply took the trend from 10 to 11:30 and you went off the 15-minute candles, you really had nothing but green candles. Let's see, am I still on Tuesday? No, I'm not. Let me get back here to Tuesday. Friday. Sorry, guys. Yeah, so from 10, yeah, so this from 10, what you had is you had price expansion. This is what, when you guys hear me use the term expansion, you had price expansion over VWAP, and that began the trend for the rest of the afternoon. And you really only had two red candles that still managed to make higher highs and higher low, not higher highs, two red candles that made higher lows. So this was a very powerful day. So Tuesday was an easy money making day, and all you had to do is take the cross of price. All right, let's move on and examine Wednesday. Let me make sure I'm in the right place. Yes, this is Wednesday. Why don't I have? Oh, I think it's lower. Okay. Wednesday. All right. So I'm going to call this a very good and easy trade day. The trend was moving higher. If you took cross of price at 645.10, which is your breakout, you absolutely would have achieved I would say a 20 to 30% return on this move. Okay. And really, you probably would have gotten your 20% right off of this move right there. And you would have potentially had another 10% right there. So this is going to count as a good trade setup. All you had to do is take a cross of price. There was no false signals, no wicks below breakdown. And so I'm going to refer to this as an absolutely perfect trade. Now, we also can understand that the trend revealed itself here at 9:45. We could actually say that the trend for the day revealed itself right at 10 a.m. It was a downtrend. So right here, the first red candle, remember 10 to 11:30, is when the trend reveals itself, and pretty much the trend revealed itself as a down day. And this is a great example right here of this being 1 p.m., right? And between 1 to 1:30, let's see what time, you can see that we had a lot of chop, right? And then the remainder of the day, we had I would actually say that this was, the afternoon trend was a reversal, but since it reclaimed VWAP so late in the day, I wouldn't have considered this tradable. So even though there was somewhat of an uptrend here, I wouldn't consider it very, very tradable. I would have probably left it alone. There's two trades on this day. One was the breakout cross of price of 645.10. The second was revealed at 10 a.m. as a breakdown. And this, you could have taken puts. Yeah, you could have taken puts again at the cross beneath 645.10 because you'd be beneath the trend line, and you would have simultaneously been beneath VWAP. So right here would have been a great second trade for the day. And I know myself, I would have gotten out with these green candles. So I would have gotten probably 40% right there and probably 25% up here. All right, there's Wednesday. So we got 2 A+ days and one day that would have required you being at least intermediate for you to have profited. All right, before I continue on to Friday, I am going to look at comments. Let me go to the 5-minute chart. And that's Friday. We want to be here. Did I mess this up? Nope, I got it right. Okay, so here we are on Thursday. I'm going to quickly take a minute and look at some of your comments. How do you view the last volume bar on Wednesday? Let me go look at that. That's a good question. I would say that this was sort of the idea of the trade, the imbalance being reconciled. And this wasn't truly an indication of bullishness. So I think that's more of an imbalance of flow because the day was really so wild. It was the rebalance of liquidity. And I don't think it was an indication that the markets were bullish. And you see that kind of reflected here, this right here, people getting out. Could have been a bet on Thursday's data as well, the PPI. Probably what it was. It might have been a bet on PPI. It's hard to say. Or an imbalancing before PPI. Not sure. Okay. Thank you, Lolita. What's a good broker? Tired of Robinhood? I like Webull and Interactive Brokers and Mumu. And there's a link, I believe, in the Discord. It's called Free Stuff. There's a link there that gives you additional advantages with my link. You get in some cases, lower trading fees. All right. Josh, engage in conversation chat during trading hours besides set up alerts and chat. Tessu is asking if I engage in conversations. It is, you can find me in there sometimes for hours, and then there are days you don't find me in there. I've been doing a ton of development for, you could say, the overall channel, the overall Discord, I've been just doing so much development, and folks are going to begin to see a lot more of my trades than they've ever seen before, literally in the next couple of weeks. So, I'll be honest with you that the folks that have bought in the past, don't give up that membership, because it'll be more expensive if you lose your membership and come back. I promise you. And change my pricing to reflect the additional access to my trades. I'm not going to change it for any of you guys. Anybody who's in is going to be grandfathered in. It's going to pay what they're paying. All right. Okay, so here we are. This is Thursday, and these are our trend lines. Now, I'm going to call this right off the bat. This was sort of the worst trend line for the day. I'm going to call this an F. Last week, if you recall, we only had 5 A's, A pluses. There was no F's. I'm going to call this an F, but I'm going to say that it was impossible for me to do, because I get up before the market opens, and I do all, or sometimes the night before and before the market opens, and I do my trade setups. And so my trade setups were designed off of price action here. After the PPI came out, that just annihilated the setup. And so at that point, we had such a huge drop that once the market recovered and crossed my 644.90, now technically, if you had entered right here, you might have been able to clear a 16 to 20% profit, maybe. There still was a pump above 644.90. But if you didn't lock in a 15% profit, this would have not been a continuation, and it wouldn't have hit any of my other trend lines, which means that it would be a fail for most people. If I traded Thursday and I saw which direction this was going, which was when we back tested and got above VWAP, I took this up for a gain. And so, I kind of assumed that we would at least test pre-market, which we did, and then we rejected. Would most people that are purely taking my trade setups on cross of price, would they have done well on Thursday? No, they would have booked at this point in the week. They had the opportunity to book a loss on Monday and Thursday, and wins on Tuesday and Wednesday. And if they had taken a small win here, they would have it could have worked. But this was not, in my opinion, a runaway, undeniable winner. And I think the reason why is my trade setups were jacked up by the PPI. But we didn't get a false signal on the breakdown. That's good. All righty. And I would say this, that if you, and I know that this won't comfort a lot of people, but I know many, many very successful traders that actually have and this will be hard for some to understand. They have only a 20% win rate. So they only get the trade correct 20% of the time, but they make tens of thousands of dollars a week. And you say, well, how could they only get the trade right 20% of the time and be doing so well? The answer is, this is why I stressed it a lot in last week's session. It's controlling your losses and controlling your profit. If you can reduce all of your losses to 10 to 20%, if you are able to get huge runaway winners and you scale on confirmation for those winners, that you could be surprised at how rarely you have to get it right. You have to react to the moment that's right. And for example, on Tuesday, it was so good and so right. Every single time it broke above one of my next resistances, you could have scaled rather than take profit. On a day like that, you could make all the money you need to make. So even though at the moment, depending on exactly how you took this, if you were a beginner, this week had 2 great winning days and 2 days that you could have gotten yourself stopped out, even though I think that most people might have been able to get 12 to 15% off that move. All right, that's the analysis. Let's take a minute and consider our hour of the day. So in this case, power hour pumped and the trend began. So the trend, 10 o'clock here. This is 10. And from 10 to 10:45, the trend was up. And interestingly, that did not give a continuation trend later in the day, but the trend was up on this day. And I think it's because as I said earlier, we recovered so much from this initial dip. There wasn't that much more the market wanted to go higher after that recovery. All right, let's go to Friday. All right. We live traded on Friday, but we didn't take the SPY. The SPY would have been the absolute easiest trade to take. And let's look at this. So 646.24 was the number, but the trade setup was literally perfect for the SPY. Okay. no false signals. We didn't cross above 646. We simply dropped beneath 645, and it had a little fluctuation, but it never crossed back above 645, and it never crossed back above VWAP, and then it gave just a massive flush, which this really should be 100% winner, just taking cross of price. It hit all three targets. You probably should lock in gains. If it hits my third target for the day, that might be all it's got at the moment. It actually popped from there, but ultimately went on to go lower. But Friday was if you simply took cross of price strategy, which I'm actually suggesting a lot of beginners in here should, Friday was a huge success. So recapping the week, you had 3 very strong win days and 2 days where beginners probably would lose money. Let's look at timeframes. This was midday and it was pure chop. This was, let's see here. And the trend, the afternoon trend, was the same as the morning trend, which again, that often is the case. And you see that both were down. So the morning trend and the afternoon trend, that was just a continuation. The midday was just pure noise and chop. So I think it's really good to have an understanding of what you're thinking about these different time frames as to, okay, if this is what it normally does, lo and behold, it's chopping. Right around now, we should begin to see the afternoon trend emerge. If we go to I never use the 5-minute after the first hour. And by the middle of the day, I'm between the 15 and the 30 because you want to be looking at those candles. You can see that once we lost, you can see that really the trend did materialize in the afternoon, and it was a bearish trend. Would I have traded this? I can tell you I wouldn't have, because I probably wouldn't have gotten into puts above VWAP. And then by the time this did confirm, even though it did go lower, there wasn't much time left in the day. And so unless I was going for a very small scalp, which I probably wouldn't, I'm looking for bigger trades, I probably wouldn't have traded this. But I definitely would have been trading this if I were on it. All right. I will work on this as this is really this is definitely something I think a lot of people need to understand. And so this is something I want to teach on more. And, this is the first time I've ever taught on this. And so I hope that it came across clearly and helpful. I think these recaps of the week are very interesting. And the purpose of them is, like I said at the beginning, it's to build confidence, as well as for you to take a step back and consider your strategy and plan. What are you doing? When are you doing it? How much risk are you accepting? How much profit are you pursuing? Obviously, you always want to be pursuing, at bare minimum, twice as much profit as you are assuming risk. So but that isn't always the case. That's a whole other conversation for another day, because beginners, and this is just my view, I've never been taught this. This is my personal experience. Beginners need a trade plan, and then a lot of them would do well to have a wider stop loss and a smaller position size. And then when you become an intermediate and a pro, you want a tighter stop loss and a much higher position size. So that's the journey. So the rules are not the same for both. Mike Pye says, I love the classes. Keep them coming. Appreciate you guys, Dale. Thank you, Ambrose. Dalton, appreciate you guys. Hope you guys have a wonderful Saturday. I've got a bunch of projects ahead of me, a bunch of stuff I'm doing with my wife. Make Saturday productive. And, I love to hear from you guys about the things that you think would be most helpful for you. We're going to continue to teach on Saturdays. Sometimes I'm going to focus more on just helping brand new folks in the Discord navigate the Discord and to understand how to get the most value out of it. And personally, I'll tell you, we've got people doing different things. I'm going to probably next week, we'll examine the trades setups and how best to trade them. We'll take into consideration this week's session with the different time frames, so I can continuously point those out to you. How price action's behaving? Is it behaving as we would expect it to in those time frames? And we'll build upon that. And I'm going to be looking at the GOAT alerts. We had 4 trades, and all 4 were profitable. We're going to see more goat alerts this week, and we're going to be examining those as well. And if you took one and you said, well, I didn't make money on it, we're going to look at what you would need to do to lock in gains on those, like how to best trade those so that they are very profitable. And then the leaps. Leaps has not had a lot of alerts. Some of the leap alerts that I've given throughout the year were given in goat alerts. That's not going to be the case anymore from this point forward. There's going to be alerts for long-term trades in the Leaps channel. I've been running it in the background, and so far they've been just very consistently profitable. We haven't had any losers yet, and so I'm super excited about that rollout. And if it is fully rolled out this week, we'll examine that in the next Saturday Welcome to the Discord timeframe. Peace and blessings. Love this time with you guys, and we'll see you on Monday. Take care.